Hi, and welcome to this video, which will use historical data as a guide to analyze current U.S. economic growth, stock market valuations, and demographic shifts over the next few years. We will also extrapolate a few potential outcomes that may help inform our financial planning in the coming months and years. First, let's have a look at our current economic expansion. The duration of an expansion is the amount of time between the recession that precedes it and the recession that follows it. The chart on the screen measures economic expansion in months. Since World War II, the U.S. has experienced 11 recessions, and the period of economic growth between these has lasted 5.5 years on average, about 67 months before the next recession hit. Today, in November 2017, we are in an expansion that's over 50% longer than average. Since the last recession ended in 2009, our economy has grown for 102 months, or over 8 years. This marks the third longest period of growth in U.S. history. Now, let's fill in all the data, but focus on the two expansion periods at the bottom of the chart, the 60s boom and the 90s tech boom. In just a few months, come March 2018, we will have entered the second longest expansion in U.S. history, as the economy will have grown for over 106 continuous months. Only the tech boom of the 90s lasted longer. During the tech boom, the economy grew for 10 full years, exactly 120 months, before it ended with the dot-com bust and recession. We are 102 months underway in the current expansion at the time of this video's publication in November 2017. If the U.S. economy continues to grow for another year and a half through June 2019, then we will be part of the longest expansion in history. So, the timing of our next recession will soon tell us whether this will be the third, second, or the longest expansion in U.S. history. Now that we have some historical context for the duration of our current period of economic growth, let's have a look at the stock market today and its valuation. The chart on the screen shows the S&P 500 from the 1920s through 2017. The gray bars indicate recessions that have occurred over this period of time, with the bar on the far left representing the Great Depression, and the bar on the far right representing the global financial crisis. The blue line shows the valuation of the S&P 500 in inflation-adjusted terms. A key point to take away from this chart is that the median valuation of a stock in the S&P 500 is by far and away at the highest level in all recorded history. Valuations now are more extreme than at any point in history, including the 1929 and 2000 market highs. A second point to consider is that since 1980, the average fall in markets during a recession is a 37% drop. Today's market is the most overvalued ever, so in the event of a recession, we could expect a larger fall than normal. Let's show this on the chart. From today's S&P 500 level of 2600, if a recession occurs and the market makes its average recessionary drop, the index would fall to just over 1600 points. Since the market is at its highest valuation in history, though, when the next recession occurs, a higher than average drop could be anticipated. As a working example, if the index dropped 50% from today's level during a recession, the S&P would fall to 1300 points. It's important to note that we cannot predict the timing of future recessions or market events, but it may be valuable to bear in mind that our market is at the highest valuation in recorded history, and our current expansion, which will come to an end, is already over 100 months in duration. So far, we've had a look at the length of our economic expansion and our phenomenal stock market valuation. Now, we'll have a look at demographics with a focus on baby boomers, who were born from 1946 to 1964, and who are the single largest economic force in America. They control the majority of household wealth and thus the investment landscape. Let's have a look at their investment holdings. The chart on the screen now shows baby boomers' households' net worth mean value per asset class. So, baby boomers have large holdings in real estate, equities, and pension funds. Actually, while it may appear these households have more assets in real estate than in equities, this can be a bit misleading from an investment perspective. Pension fund assets include 401ks, IRAs, and other equity investments, often managed by employers and pension funds. So, let's update the chart to reflect where baby boomers' investments lie, given a conservative estimate that 1/3 of pension fund assets are in equities. This depiction shows that average baby boomers' asset holdings are in equities, followed by real estate, then by non-equity pension fund assets. So, we learned in the previous section the valuation of the stock market is at its highest level in history. Also, keep in mind this next piece of information. All U.S. households, not just boomers, but all households, currently have a near record percentage of their assets in the stock market. The only time households have ever had more of their wealth in equities was at the peak of the dot-com boom. So, where do we stand? We are about to enter the second longest economic expansion in history, which will be over 3 years longer than the average expansion for the past 70 years. At the same time, the stock market is at its highest valuation in history, and American households now have a record percentage of their assets invested in equities. Finally, more and more members of the wealthiest generation in history, which currently puts more money into equities than any other demographic, will begin withdrawing assets to fund their retirement. What can we expect? We know, with very high probability, a recession will come at some point in the next 3 years. We know stock markets drop precipitously when recessions occur. And we know that many of the country's wealthiest demographic will be nearing 70 years old and will be drawing down their assets to pay for health care and retirement. How investments will play out during and in the aftermath of the next recession is unknown, but now is likely a great time to consider possible scenarios that could occur so you can make the best financial decisions possible. As a final note, I'd like to clarify one thing for all investors, and baby boomers in particular, to consider in advance of the next economic recession. The values for household wealth I showed earlier in this video were the mean, or average, asset holdings of all baby boomers. The average wealth per household, shown in blue, is what you saw. While this is, in fact, the mean value for this generation, the mean numbers are extremely skewed by the wealthiest households, which own much more wealth than the bottom 90% of baby boomers. If we calculate baby boomer household wealth by its median value, shown in orange, it better approximates the wealth of middle America baby boomers. The typical baby boomer has far less wealth than what the arithmetic mean shows. This is simply food for thought. No matter what generation you are from, I hope this data can be valuable to your financial planning. Thank you for your time.